over the last 5 years, markets have changed materially. It actually goes back more than 5 years, but obviously the rise of passive investments have become bigger and bigger percentages of the trading volumes. Now, what does that mean and how does that impact the SMCO strategy or process? We've seen it recently here. There's these massive repositionings that used to go gradually and take more time. Since people can express these views by buying or selling big chunks of the market via passive instruments, it happens very violently. And what we've had to do in the strategy to adapt to that is be aware of it, determine whether or not it's an overshoot either up or down, which is often the case with these violent moves, and then decide whether or not it's something that's going to be persistent and we need to change the portfolio, or it's going to moderate and we don't have to move the portfolio. In either situation, we also use this to our advantage, because if we see stocks that are overly punished, we may take advantage and buy them. Conversely, we may have stocks in the portfolio that we think get a little more love than they deserve at any point as people are repositioning. It's an opportunity to trim those positions. So it has impacted a little bit on the edges how we tactically operate the portfolio. What's really important, I think, is that we stick to that long-term philosophy and process and just make sure that you don't kind of fall victim to what's noise as opposed to signal in terms of what's going on in the market.